Hey, Terry, welcome to the podcast. I really appreciate you taking time out of your day today to speak with me. Can you take a second to introduce yourself?
Sure. Thanks, Brian, for having me. Tarry Shebesta, CEO of FlexPath DXP, and also president of the National Vehicle Leasing Association.
Do you mind telling me a little bit more about the National Vehicle Leasing Association and how you became the president of that organization?
Sure. How much time do we have? Yeah. The National Vehicle Leasing Association has been around now. We're in our 55th year, I believe. So it's an organization that's been around a long time. It started on the West Coast and as a California only primarily organization, and expanded nationally and became the National Vehicle Leasing Association. So I've been involved with the organization since 2000. When I started my leasing company in 98, direct to consumer online. It was all back in the day. That was the digital retailing in the early days. And so I started with a leasing company and thought, gosh, I need to find an organization that, that I can that can help me and I can be a part of. And I get this brochure in the mail of this conference that's going to be held with the National Vehicle Leasing Association in Scottsdale at the Camelback. And I'm like, wow, this looks like a great place to go, right? To hang out. So I went, and I had no intention of sharing, right? It was all about what can I learn from everybody else in my new endeavor as a leasing company. And so, but I got there and it was really exciting to see the camaraderie. It was almost like a family. Wasn't like, oh, we're here. It was a lot of sharing. And I was like, okay, that's pretty cool. I really enjoyed it, got a lot out of it, met some great people from all over the country. And my background's information systems. So I was more about what's out there, because I was online, leasecompare.com, right? So that was the early days of online, and we were direct to consumer, and I was just trying to figure out what can I learn from others in the industry. Well, it ended up I was sharing more than I think I was learning at first, at least on the technology side, to the point where the current president, actually was a past president, Jerry Duffy, said, hey, we could probably use you on a committee. And so I joined the organization. I joined the board. I was brought on as an associate member of the board, and through 4 years, ended up being the president. And so 5 years, fifth year as the president of the association. And again, what I learned was it wasn't about me just getting, it was about giving and helping the industry as a whole. Because it's not just the NVLA is not just about our individual companies. That's part of it. That's what what builds the organization. But it's really about how can we help and impact the industry as a whole in a positive way, right? What can we bring together as an association to help move the auto leasing industry along? So that's kind of how I got involved. And then I was president in 07, 08 term, 1 year term. Well, we go now, it's 2024, and I'm president again. So I was on the board the whole time, and it was like I got to see new people come in, and as an old guard, I was able to bring that history along with the association, so that we didn't start over again and figure out, okay, what are we doing, right? We brought that history along, and it was fun for me to be a part of it the whole time, to the point where it's like, okay, I'm president again. That's never happened. Not even sure how that happened. It just kind of happened. Anyway, it's all good. But this time around, I'm now in a better position to bring more to the table as president of the association. Whereas last time it was like, okay, just learning, okay, president of this, and now it's like, okay, I've been here long enough, I've been in the industry long enough that I can make a better impact to the association and to the industry.
So let me ask a follow-on question. So you said you've been associated with the NVLA since 2000. How has the organization evolved over the last 24 years?
Yeah, so that's actually a very good question, because not only is it a good question for our association, but as the industry as a whole, right? So we've gone through two residual crashes in the marketplace where vehicle residual values were overinflated, and those cars come back, and then now all of a sudden, everybody's underwater, right? Especially lenders or lessors, like larger banks and some of our members. The biggest impact that's happened in that span has been the industry crash. Okay. It happened right after I was president, and it wasn't my fault, promise. But that really impacted our organization really dramatically, because you know how hard it was for dealerships, right?
Yeah.
And lenders in general, and leasing companies, right? And to the point where a lot of them got out of the business. So it definitely affected our membership dramatically. And so we had to almost hit the reset button and start to think about, well, okay, we're losing members, and it's because of what's going on in the marketplace. So we had to do a reset. We had to rethink, how do we think about the association? Let's come together, because again, it's a family. It's like being in a family. That's how great that organization is. And so it was like, how do we work together to rebuild? And we've been doing that. It's a slow process, no doubt, right? Because recovery from independence is harder than it is when you're backed by OEMs, right? And franchise dealerships. It was hard, but there's more resources they have to lean on to help them get through it, versus an independent, which you're on your own. Good luck, right? So it's been a road. We're actually seeing positive membership expansion again. Obviously, and I think we'll talk about the leasing industry as a whole. Is seeing an upswing, and that obviously helps the independents.
Did you see another downturn because of the impacts of 2020 and how there was some instability in the auto industry from a supply chain perspective? How I'm trying to get my point across. Did you see another major industry-wide impact to you, similar to the 2008, 2009, like post-COVID?
Yeah, less of an impact. Obviously, the biggest impact is we had to cancel our conference in 2020.
Sure.
I think it was, right? And that devastated me, because those are great events to go to, and it was important at that time because we were in the middle of COVID. And it was a good time for us to, again, get together. How are we coping as an organization? And because most of us, we're not competing, we're all over the country, and there's overlap. But again, it's a good group to kind of, how do we figure things out together? It no doubt impacted us again. And so we went from that crash to kind of building back up, and then not so much of a downturn for during COVID, because the independent leasing companies in general are more hands-on with customers. Now, during COVID, I don't mean literally hands-on. What I meant is we're talking to them, we're delivering vehicles, we're doing all those things that the franchise dealerships wanted to try to do, and thought, wow, we need to be better at working with consumers and getting them to get vehicles in a way that they're comfortable with. We've been doing that since day one, right? We're all about what's the best way to service the customer, whether it's in person, over the phone, having the vehicles delivered. We're very good at that. Right? Our members are very, very good at that. So that personal attention and touch really helped us actually during COVID. Because we were able to step in and provide those services that consumers were looking for during that time. So we actually turned out okay for that.
You had mentioned you're starting to see an upturn. What are you guys doing to attract new members in, this very digital age?
Again, great question. And my background being information systems and on the technology side, that's one of my goals as president this year and next is to have our members benefit from the technology that's out there. Now, there's quite a few things that are going on. Now, let me come back to that in just a second, because the other thing the industry does, our association does, is we also work on the legislative side of the thing, right? What's coming down the path for that could affect our members on the legislative side, like the FTC cars rule. Okay, that's a big one out there for everybody, not just our association. Now, back in the day, I would say around 2003, 4, we were dealing with vicarious liability, and that was a big deal in the marketplace, in the industry, where if you were leasing a car and you got in an accident, well, whoever you got in that, if it was your fault or even not your fault, you could get sued, but you could also sue the leasing company. So vicarious liability it eliminated leasing in New York City for a couple of years. Finally, we got the highway bill passed in Congress, and that eliminated vicarious liability for lessors. But those types of things is what the association really helps to benefit our members with. That also gets members excited about joining, because they know there's somebody there that's looking out for them. Okay, so that does help grow membership. And the FTC cars rule that's out there right now, that's getting a lot of exposure to our members, so that's helping. But on the technology side, I think is really that's the exciting part for me. And actually, we have something that our company ourselves are going to announce as a member benefit at our conference coming up next month in October for our members around the idea of identity verification and credit pre-qualification. Big stuff, right? Identity verification is huge. Fraud is you almost every day you're seeing something out there that's talking about fraud in our industry, because it's a lot easier to do it. It's a lot easier for fraudsters and bad actors to come in and take advantage of the technology that's out there that we're not paying attention to. So my goal as president, one of them, is to bring these technological advances in favor of our industry, so that we can fight these bad actors that are out there. So those are so you got the technology side, you've got the legislative side, compliance, and all of that. Those are the two big ones that I think we're really working on to grow membership.
And you had mentioned it just briefly before, but as president, second time president, what do you want your legacy to be at the NVLA?
What I like to see is the NVLA become the predominant association for the leasing industry. And when somebody talks about leasing, they should immediately think, NVLA, right? And it's not just independents. So if you think about it, we're the National Vehicle Leasing Association. That encompasses anybody that's doing leasing, whether you're a lender or a dealer, an independent dealer or a franchise dealer or a captive. It's all about the leasing industry, commercial and consumer, both. So I think what I'd like to be able to, when I leave this organization, which, it's what they say in the auto industry, you get in and you never get out. Never. But I really want to bring together everybody and anybody that's involved in the vehicle leasing industry, commercial, consumer. It's all plays a role. It's all interrelated. I want this organization to really be it's really the only one out there that covers everything on consumer and commercial together.
Excellent. So we're going to kind of jump around a little bit. So let's talk about more generic automotive trends that we've noticed over the last 5 or so years. I had mentioned previously, post COVID, we were seeing a lot of supply chain issues. How did that impact the NVLA members as a whole?
Yeah, it really did, because the commercial side of the business was also affected, right? Inventory levels it was hard to get inventory, for our members. And so a lot of that we worked, a lot of it was we went to used vehicles and trucks and that sort of thing. So the NVLA members were very resourceful. Okay, so we figure out what our customers need, and then we go get it, right? Whether it's new or used, and that's one of the advantages on the independent side is we, as an independent leasing company, can lease anything, any make, any model, new or used. We're not locked in to a particular make or model, so we can be more resourceful and find what our customers need and go get it. So it no doubt impacted us as leasing companies. As independents, we're usually better at negotiating pricing, getting fleet discounts, because we have fleet codes from the different manufacturers. But when there's no inventory, it doesn't really matter. So you have to figure out what are we trying to fulfill for our customers, and go out and find that and get that. Difficult, but that's how we were able to get through it.
How did you knowledge share through that time frame to make sure that the other independents were seeing similar advantages as so all the members were getting the same consistent value across the board?
So podcasts, webinars, of course, our conferences, and our monthly LeaseWire newsletter that goes out to members. It's, again, just keeping them in the loop, answering questions. We have a simple list, so any member can send an email to the whole membership asking questions. And those can range from, hey, I have a title issue in another state that I'm trying to do business in, or I need a vehicle in this state, or wide variety of questions that come through that a member will reply to. Oh yeah, I can help you with that, or oh yeah, I can do that. Or it's incredible. It's like 20 Group on steroids, right? It's like crazy good, because you just have access to the membership as a member.
So let's talk about another trend that is now starting to, I think, trend in a better direction. Some of the consumer behaviors surrounding the automotive industry. I know that the interest rates have been held at a historic high for quite a long time. We've now seen news recently that the Fed is going to drop the interest rate. How has that impacted people's decision on buying a vehicle versus leasing a vehicle?
It's the best way I can answer that is it's about education. Okay. Most people that are going to acquire a vehicle, you can finance it, or they can pay cash, finance it, or lease it. Unfortunately, there's not enough education out there in the marketplace, or miseducation, I will call it, about leasing. So when a consumer is looking, or when I say consumer, it's both commercial and retail. When I need to acquire a vehicle, it's like, okay, I need to get it. And how am I going to pay for it? Okay. Finance, lease, those are the two. Almost 90% are doing one or the other. They're acquiring a vehicle. It's got to be about the education, because today, as an industry whole, meaning the majority of consumers are directed to one or the other through subsidization. And I'll come back to your point about the interest rate in just a moment. But when you look at the market as a whole, everybody's like, oh, well, leasing is this percentage, and oh, it's increasing. This, overall percentage of lease penetration is increasing. Well, why is that? And in most cases, it's not because the consumer sees leasing as a better alternative to financing. It's because captives put subsidizations on leasing versus financing. I'll give you an example. If I want a consumer to finance, I'm going to promote 0% or low finance rates. And if I promote that, people are going to go that direction. Wow, I get a low interest rate. Okay, I'm heading there. But if I start talking about subsidizing residuals, which is what the vehicle is worth at the end of the lease, and I start promoting lower lease, I start promoting lower payments because of leasing, because I'm artificially inflating the residual, which brings that payment down. Now people are driven toward leasing. So the best scenario, if there's any type of subsidization, I like it where you have both a cash incentive or rebate, and we're talking new cars here, okay? Cash incentive or rebate versus a subsidized rate. Because a lot of times for an independent, we can take that cash incentive, apply it to maybe a higher rate because, you know, we have to get our money. We're not the cap. We can't do a 0% because I don't have the incentive, but I can take that cash and apply it to my rate. And now all of a sudden a payment is in line with a 0%. So it's just how you use those incentives and rebates that will drive that. But again, when you're talking the industry as a whole, the captives dictate the majority of whether they're going to finance or lease. Now, back to the payment. Or high interest rates. Let's go back to 0%. So under a 0% rate, if the price of the vehicle is higher, you have a payment. If you go to a higher interest rate, but you're lowering the price of the vehicle through incentives, you're almost at the same payment. Now, I'm not saying that's the case in every time, because if you're not getting those incentives and you raise the rate, your payments are obviously going to be higher than it was back before, right? The thing about this, Brian, is that it's always changing. You know, here's where we are this month. Next month, we don't know what we're going to have with inventory levels and incentives and rebates. And all of that drives the used vehicle market too. You're hearing more and more leasing. You're seeing the incentives go towards subsidization versus 0%. And so that's going to make more leases. Now what's going to happen is those cars in 3 years are going to come back and those residuals are probably going to be higher than what the market value is. So now we're going to get an influx of used vehicle in the marketplace. But this is just, it's always, you're never going to be able to be like, oh, it's always going to be this. No, it's never going to be one thing. It's always in flux. It's always changing. It changes with, like you said, the ability to have inventory. So inventory constraints will affect it. Consumer behavior, interest rates are going to affect it. And it's always going to be changing. But at the end of the day, whether it's subsidization or not, in my view, and doing this for 24 years of being in the leasing business, I can say that leasing in almost every case is a better option for a consumer. And I've gotten every single question about leasing. Oh, I can't lease because of this or that. If education is done properly for leasing, it makes sense, regardless of whether you're talking incentives and subsidization.
You mentioned education a couple of times while talking about the subsidization. Where do you think the disconnect is from the consumer's perspective in educating them about leases?
Yeah, that's good, because as NVLA, we do a very good job of educating consumers about the advantages of leasing. The industry as a whole, not so much. You have independent banks that offer leasing, and there's not as many as there used to be back before the 2008 crash. It pretty much eliminate most of them. There's still a couple, and get into that later if we want to, but the captives have the best opportunity to educate about leasing, right? Because most new cars, you got to go to the dealer. And I think there's a place there that's missing, where dealers need to be more educated about the leasing process and what are the advantages of leasing versus just financing. That's what's missing in the market right now. Because if the dealer doesn't understand leasing and the value of it, the only way it's going to happen is if a consumer sees an ad for leasing and a low payment, they're going to come in and say, oh, I want to lease that vehicle because I saw the ad. It's not because the dealer sat down with them and educated them on the benefits or what are the pros and cons of each. Okay. I think that's got to be done. And I think if that's done, then consumers are going to feel better about their decision. Because if they're just sold something and not explained why they should lease or finance, if there's nothing behind it except for, oh, you're going to get a lower payment, then all of a sudden it's like, well, did I really make the right decision? Or what happened? Or I got to get out of this lease early. Ooh, there's a problem. uh, so there are reasons to lease, reasons not to lease, and there's certain ways of structuring leases that benefits the consumer. The dealers do fine too, but that's got to be done. The education part has to be done on a wide scale level, or we are always going to be in the 20 to 28% leasing penetration if done properly. And I when I say this to a dealer, if your lease penetration is not 80% plus, there's a problem. They're like, what? Wait, what? What do you mean that? And even to more so today, it's not like technology in cars. Back in the day, technology and changes in cars was, oh, we went from a cassette player to a CD player. Okay. Today, you've got the safety features, you've got EVs, and I tell consumers, if you're looking at an EV, there's no way I would ever buy an EV. The technology is changing so fast. Do you want to get stuck with old technology?
Well, not only that, especially with EVs, if you have purchased an EV, think about the maintenance on if anything happens to the battery. Think about your phone. Your phone is only good for about 3 years. It's a similar battery in an EV. And it's just massive in size in comparison. So it costs you, let's say, $300 to replace the battery in your phone. It's going to cost you, I'm ballparking this, I don't know off the top of my head, but I would say probably 10,000 plus to change out your battery in your EV.
Yeah, it's thousands for sure. But again, the thing about old technology versus it's changing faster than it's ever changed, right? The electronic or the vehicle protection systems, lane warning and this and that, self-drive, all those things are changing so fast that and people are like, well, I want to own my car because, I just want to own it. Okay. And I always do a great job when I can sell it, because I own it. Okay. Who's going to want your car in 3 years with old technology? You're going to be stuck. So if you're going to buy it, plan on keeping it forever because no one's going to want it, or you're going to have to just take such a hit. And that brings up another point about leasing. And I'll just throw this out there. If you remember, we had those high gas prices and everybody was dumping their SUVs. I think it was before the crash, actually. We knew it happened, and I can't remember the year, but everybody was dumping them, like losing money when they had bought. Now, and then they were going into small cars, right? Fuel efficient cars. The people that leased their vehicles were stuck. They continued to move on. They paid off their lease or got out of their lease. They lease terminated, and they got into a smaller car. Well, then what happened? Then the fuel shortage was ended, and now everybody was dumping their fuel efficient cars and going back. My point here is the person that they leased the SUV. They didn't lose any money. They turned it in, got the smaller, more fuel efficient. Oh, fuel prices went back down. Oh, my lease ended. I'm back to where I want it. It keeps you at an even keel. So the people that lost on the SUVs bought the small cars and then lost again when the fuel prices went down. They lost twice. Whereas the people that leased, went through it. Even though the fuel prices were higher for their SUVs, they didn't lose the money if you had bought the car, you would have lost thousands more than you paid in fuel. So it just keeps you on an even keel is what leasing does.
Sure.
It's less stressful.
So let's change topics. I think that we've gone through quite a bit of trends. Let's talk about advice. What is some advice that you would try to give someone who's either starting out their career in automotive, or advice you would give to your younger self?
Well, persistence is important. If you're going to dive into something, one is education. And unfortunately, when I first started, I actually started in 1989. It was dial-up bulletin boards and CompuServe, right? But it was always that quest for information. So I was always looking at how do I learn about the marketplace. And there wasn't a lot then. I mean, I have books on a bookshelf back here, how a lease is calculated and all of that, right? Because there was nobody to go to find out. Nobody, dealers didn't know. I mean, they had computer like LeaseLink and all that. They just calculated it. It just happened, I had to learn and understand what the leasing business was about and how it worked and what were the benefits. So if I had known earlier about the NVLA, probably would have helped me a little bit faster move along. But I would say anybody starting, education, learn about what it is you're going to do in the marketplace. Don't look at somebody else and say, "Oh, I can do that too." Probably not as well. It's not about a me too thing. If you don't have the underlying basics of understanding what it is, especially in our industry, because as you know, and we can go to a conference and an ADA and walk the show floor and say, okay, that's not going to work. Oh, that's interesting. If you're in the business long enough, you can understand and see things that I think a lot of people should, maybe they should you should have some type of you should have some type of degree in our industry before you're allowed to go do anything. No, I just kidding, but but in all honesty, yeah, the education part. So, which is why I think with NVLA, the only way we're going to grow, number one, grow the industry or grow our association and help the industry is through educating people that are coming in and making it easy for them to understand the business so that they can use their entrepreneurial skills to take that base information and put a different spin on it that can move the industry forward. So I think education is all about it. NVLA is a strong history of leasing education in the marketplace. It's just needs to be expanded, not just to independents, but also franchise dealers.
So on the flip side of the best advice that you would give your younger self, what is some of the worst professional advice you've ever gotten?
Wow, that one is a tough one because everybody loves to give advice, right? Worst advice I'd ever gotten. And I almost have to think because you those types of things you kind of like you put out of your mind, right?
Yep.
Types of bad advices. Let's go with, so having people surrounding yourself with people you trust is good, but some of the business advice, I've gotten great business advice from my father-in-law and others, right? But the worst advice can come from people you know and trust that you don't know what you don't know. You think they know what they know everything, or they know more than you do. But I don't think there's one thing I can point to. It's a lot of different things, but I guess what it brings back to is trust but verify.
Like you had mentioned, you get advice from everybody, but you may not apply the same filters for every source, if that makes sense. So someone who may be closer to you or someone who is maybe a little bit more knowledgeable, at least in your mind, that at that point in time may provide you advice that may lead you down the wrong path. So always, I think you said it right, trust but verify, or understand that you have to use your own lens while processing that advice that was given to you, because the advice that you may be seeking may be more nuanced than the advice that they've given you.
Yeah, I think that's absolutely true. It's not simple, right? And people love to give advice.
They sure do. All right, Terry. So this is the last bit of the podcast. This is when I give you a 90-second window to plug whatever you are passionate about, whether it's NVLA or another organization or just something that you feel strongly about. So whenever you're ready, go ahead.
And being in the business now 35 years, right? 35 years, you see a lot. And it's changed over the years. As we've talked about, we've seen industry crashes, we've seen fuel prices, we've seen residual issues. There's an EVs now, right? It's always changing. But the big thing right now that I'm seeing, that I'm really involved in and really pushing, is identity verification, right? Identity theft is a big thing, and I'm hearing it from dealers, lenders, which we work with both dealers and lenders, and it's a big deal. It's really a big deal. And so when I go to sleep at night or when I wake up, or when I'm in the shower or I'm driving, which I do a lot of driving. I love driving because I can do a lot of thinking. It's forced downtime. It forces me to think. But with all my conversations, identity verification is right now the biggest thing. And I will tell you, it's not just that now. Over the years, and I think we mentioned this earlier during previously in the podcast, where we've had some fraud issues we've had to go through. At one point I was on the witness stand for 4 hours helping the FBI solve a case of a company that defrauded myself. Of course, we had insurance, but Fifth Third, U.S. Bank, other banks. Right, it was a big deal. So 4 hours on the witness stand, and we did put them away. So I have some firsthand experience about fraud and what's happened in the past, and I see what's going on now. It's even more prevalent, and lenders and dealers are starting to see this. So to me, the big thing right now that I'm focused on is fraud prevention with credit pre-qualification. They go hand in hand, right? Because if somebody wants to get pre-qualified for a loan, I need to make sure it's you and not somebody else that's doing the pre-qual. It's crazy, and it's so easy to defraud right now. And if dealers aren't paying attention and they're not doing the right things to make sure, they're going to get hit, and they're getting hit. It's happening like more than ever. But I do think, and this is why I'm putting back my lender hat back on, because it's going to come from the lenders. The lenders are going to drive this identity verification piece because it's hurting them. If a dealer does a fraud deal and they go out of business because of it, or it's the lender that's going to take the hit, okay? And compliance, the Fed, everything is going to come down on the lender. It will happen with the dealer too, with the CFPB and all that, but they're also looking at the lender because that's the bigger picture. So I think the lenders are going to drive it. I'm focused on working with lenders and dealers because I have experience on both sides. So that's kind of that's what keeps me awake, not because I'm afraid. It's because I'm working on solving those problems in our marketplace.
Well, Terry, I thank you for your time today. It's been a great conversation. I can't wait for the feedback that we get on our episode.
Well, I appreciate the opportunity, Brian. And I love the industry. I love being a part of it.